that was the whole idea about it.
And did you buy all at once or did you acquire over a period of time?
Yeah, I buy it all at once.
Okay.
And the stock didn't perform when I buy it. Stock didn't perform for 9-10 months. It was range bound and suddenly it spiked from there.
Yeah. And so I'm just wondering, is this a considerable portion of your portfolio? Because look, ultimately in a stock portfolio of 3 stocks are multi-baggers, that's all you need. But is this a big portion of your portfolio?
No, it is not a big portion. It is around 5% of my portfolio.
Congratulations, sir. So therefore, what you're trying to ask is whether you should take some money off the table right now. Is that right?
See, government is promoting a lot on shipbuilding and all these things. And seeing the geopolitical situation, I think that I should hold it till 2029 and again review it according to the policies and all that. So I just don't want to book the profits and shift to something else when this stock can further perform. So this is my outlook about it.
So what do you want me to...
I just want your views on it.
Okay, I got your question. So Asta, then the question is for you, because he's sitting on gains of 1.4 crore. You heard about when he bought it, levels of 140. Most investors have never seen this level, right? Because they've looked at Mazgon much later when it started making headlines. So he wants to hold to 2029. Should he do that?
So this company, it was established way back in 1934, first of all, and they have a capacity of 805 vessels, 11 submarines, etc. Now, what is more fascinating about this company is their entry into the aviation sector. Now, they have started taking the contract for helicopter repairs as well. So apart from this, I mean, they are building dry dock, etc. And their entry into the aviation sector is also looking very, very, strong to us. So my idea here is to stay invested in this counter. I think if there is no hurry to book the profit, then remain invested in this counter because we are seeing much more potential to be here, and hence we are recommending a hold on this counter. Initial price target can be set at around 3,900 odd levels.
All right, we had one more query on our WhatsApp regarding Mazgon Dock. I hope that answers your query. The next question is from Bhaira, who is writing in from Hyderabad. He's got 2,025 odd shares of NMDC bought at 70 rupees a piece. And he wants a long-term outlook again on this from a 5-year perspective. Asta, I'll come to you on this one. He's probably seen the year and bought the number of stocks, it seems. Your view on NMDC for the next 5 years?
Definitely for next 5 years, this is a very strong stock, and our idea is to remain invested and accumulate at the every lower level. So we believe that this counter is a potential, and now the kind of capacities they are targeting around 100 megatons per annum by 2030. So definitely, if these capacities will come on board, definitely they will help the company in posting very good numbers going ahead. So for next 5 years, it is a good stock to remain invested in. Hold is a recommendation from our side.
Okay, Orient Tech is the name of the counter we're looking at next. Not a very large counter, 1,370 odd crore market capitalization. We've got Vardarajan, who's writing in from Tamil Nadu and asking about this. He's bought at levels of 390, slightly elevated levels, and he's got a target in mind, 410 levels, and he's wondering how long it will take for it to hit that mark and whether that looks like it's on the cards. He's got 150 shares. Vikas, any view on the charts?
Look at it has been, the stock has just recently listed. No doubt it had a super listing. The stock went to an all-time high near to 620, 630 levels. And from there, the stock has already halved by 50%. No doubt it has made some amount of formidable bottom near to 300 base levels area and witnessing some out. But it is remaining sideways. So unless until it doesn't cross on the higher side 365, 380, which is the 100-day average, the stock would remain subdued. If that is being crossed convincingly, then we could see strong amount of momentum. So I would recommend to remain invested at current levels. Once 360, 385 is being crossed, then the stock would see strong amount of uptake.
All right, so that's the view with regards to where Orient Tech stands. Our next question is on DLF. We have Ramesh, who's writing in and wants to know as to what should be the outlook for DLF. Is having 100 odd shares bought at 670 a piece. Asta not sure if DLF did come out with its earnings or is expected to post its earnings today. What's the view like for DLF?
No, they have already announced their earnings, and it was a stellar growth which they have posted in their earnings. So yes, the view is really positive on this counter on the back of the strong earnings which this company has posted, and we are recommending hold on this counter with a price target of 850 to 880 odd levels.
Okay, all right. The next question is, okay, so you already taken on DLF. All right, let's take our next caller. I believe we've got Anant calling us from Bengaluru. Anant, very good morning to you. How can we help you today?
Hey, good morning, Alex, Mahima, and Asta ma'am. I had a question. I was planning to invest around 5 to 6 lakhs in electronic equipment management companies and transformer and distribution companies. Okay, I had a question where should I go and make a concentrated portfolio like something like in ABB, Siemens, Hitachi, or should I make majority of this investment in each 1.5 lakh in each company, and then go into smaller companies like Silchar, Indotech Transformers, and GT&D, a bit like say around 40,000 in each companies. I'm ready to take risk and I can hold for 5-10 years, and if it goes 20-30%, even 40% down with a the company is good, I can hold. If it goes down, I can sleep
Got your question. Yeah. And the results have been, the results have looked good, Anant. I see why you're asking. GT&D, for example, this week has done particularly well. If we can pull up that chart, just so you know, it's up about 5%. Yesterday it was locked in upper circuit, very strong set of numbers. So therefore, I see why you're interested in this stock. Asta, the only problem is that the valuations are not supportive, because if you have to pay what 70 times, or even upwards of 60 times, then it's not really something that is pricing in just the next year. It's pricing in the next couple of years of growth, right? So, would you be willing to deploy in any of these counters, and what should he do as strategy?
Yes, the pricing seems to be, on the higher side for these counter. But now, if I talk about ABB, I think that is a good stock to remain invested in because the results were okay. And in fact, if I look about the pricing also, it is trading at a price to earning multiple of 67, which is at around the industry price to earning multiple, which is 68. So I think, yes, it is at around the industry price to earning multiple ABB. So there is still a scope to, invest in this counter because there's a scope left for the further upside. Now, another counter which the viewer has talked about or the investors talk about is about the Indotech Transformers. So right now, I'm not very much convinced about the fundamentals because what we have seen in the result was a degrowth. So I think one should remain invested in the frontline, stocks like ABB, GV, TND, or for that sake, Hitachi, etc. But for the smaller companies, one really need to look about their financial performance first of all, because they are more vulnerable to stock market conditions. So idea here is to invest in the frontline stocks like ABB, Siemens, etc. And for the another or a smaller companies, one really need to see their fundamentals and then make entry. As of now, I'm not recommending Indotech Transformers for that sake.
I want to confirm, you're saying a buy in ABB, Siemens, as well as Hitachi, all three?
Yes, they are looking good, but ABB is the strongest among these three.
Okay, the next question is on Apollo Microsystems. Sushila from Bellary has bought 302 shares at 124 a piece and wants to know whether she should hold or exit at the current levels. Asta, I'll again come to you on this one. Apollo Microsystems is the counter. It's overall a very interesting company to watch out for, even in terms of how Q4 panned out for them. Revenues up 19%, EBITDA up 25%, margins also up 22%, and net profit was also up 8%. What's the view like?
The view is positive for this counter for sure, because yes, the results were up to the mark, and what we have seen is the reflection of the good results in the stock price momentum. So yes, the review is positive. one can remain invested in this counter. Initial price target which we would like to give to this counter is at around 180 to 190 odd.
All right. All right. So that's the view on Apollo Micro. It's up as much as 14% in trade today. Wow. Amit is calling us from Noida. Amit, very good morning to you. How can we help you today?
Good morning. I have bought 1 lakh shares of Equinox, now called EMBDL, at a price of 143.
Okay.
Today it's trading at 103. I've been holding on for the last 6 months. So currently I'm suffering a loss of nearly 40 lakhs.
Yes.
So, there is a result which is supposed to come out on 29th. I am like confused as to hold on to it or dispose it. What should I do?
Yes. Can you help me understand why you took such a large position in the company?
I took it because of the merger of Embassy and India Bulls. They have the largest land bank in India, and I thought the plans would go accordingly. But unfortunately, things didn't transpire as I thought.
And if the advice is such, and I will go to Asta on this one, you could hold for the long term?
I can.
Okay.
I can hold for 1 year, 2 years also.
Okay, I just want to understand, this is not a large part of your portfolio, I hope?
Yeah, it is a very large part of my portfolio.
It is a very large. Would you be comfortable telling me what concentration you have in this particular stock?
50% of my portfolio.
Understood. Okay, Asta, from that perspective, then the issue is ability to hold if there's further downside. So what is the advice in the context of what he has just stated? Obviously, also the fundamentals. Please comment on that first, but know that it's about 50% of its portfolio.
I think, first of all, one can remain invested in. Yes, there was a merger between the Equinox and Embassy, and I think it happened in the February month itself. But now, as today being the result day, there is, no logic of exiting as of now from this counter without seeing the results. Maybe the results will not come on the expected lines, but one can be very much sure when exiting from this counter, because here the amount involved is very high. So my idea here is to remain invested in this counter at least till the results come, and then again review the query over here.
That's with regards to where Equinox stands. The next question is from Sujata, who's writing in from Bengaluru. She's bought CDSL shares 200 in quantity at 1400 piece, and she wants to know as to what should be the target price from a longer term period perspective. Vikas, I'll come to you on this one. What's the view like where charts are concerned for CDSL?
So for CDSL, the charts remain pretty prospective and promising. Because if you look at the whole capital market structure, looks pretty upbeat. CDSL has been continuously trading above the 200-day average for the last 6-7 trading sessions, and we believe the stock has the potential to retest near to 1640, 1650, the intermediate highs which it made in the month of December. So remain positive on the stock. We expect the stock to retrace back near to 1650 levels for the next few months. So view remains unresolved.
So that's the view with regards to where CDSL stands. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
That's huge! That is a biggie! It's out of it!
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay
Welcome back. You're watching Ask Profit. Let's take a check of where the markets are right now, and we're pretty much holding at 24,780 or thereabouts on the Nifty 50, down about 0.9% and very close to the low point of the day. And quite a bit of the selling, as I pointed out at the start of this program, is concentrated on the large caps, and you have the broader markets that are outperforming at this stage, still losing ground, but the broadest end of the market, the small caps, are actually gaining right now. They've recovered quite a bit of ground and they're trading in the green, up about 0.2%, and I would hazard a guess to say that the advance decline ratio has improved just a tad bit. In fact, let's pull up that. There you go. It's a narrowing of those lines towards the midpoint, and hopefully it continues to improve over the course of the day. By the way, a lot of you know this already, but for those that haven't seen the next program, it's Know Your Company, and this is a show that gets you in-depth analysis of stocks that you probably hold in your portfolio or are contemplating holding. The stock that is going to be discussed today is Jyoti CNC. And the reason why we're talking about it on Know Your Company is that it's currently trading at a premium valuation, 90 times trailing price to earnings. The question we're asking is, are the valuations justified based on the growth that the company is seeing? It's a specialized business, of course. What are the opportunities and is that enough to justify the valuation as it stands right now? What are the question marks about working capital? What is causing the pressure for the company right now? They have large capex plans. We're going to look at funding. We're going to look at some of the sustainability of their return ratios as well. So, as I said, in-depth analysis of how this stock and company are set to perform. I believe we've got our next caller. Pradeep is calling us. And as I understand it, Pradeep, you're a senior citizen because I saw your message as well on WhatsApp. You'd like to know about Piccadilly Agro, is that right?
Yes, sir.
Please go ahead. Thanks so much for calling us.
See, I had bought initially 200 shares of Piccadilly Agro at the rate of 38 rupees.
Okay.
And I had been booking profits at periodical intervals.
Right.
Currently, I am having only 50 shares. So I just wanted to ascertain whether I should hold on or should I book my whatever residual profits I am having.
Okay. And you bought it, I'm assuming, because of the stock price. I'm just guessing you bought it a long time back, right?
Yeah, about, see, I have been investing for the last 3 years.
Right.
So I had bought it at around 38 rupees around 3 years back.
Got it. So you've had stellar returns. So let me get you a relatively shorter term view on the share, since you'd like to know whether to book the rest of your profit that you've made. Vikas, on the charts, what's the view on Piccadilly Agro?
So Piccadilly Agro is only a BSE listed company, so it lacks little bit amount of volumes. But if you look at the stock structure, has taken some support near to its 100-week average of 515, 500 odd levels. So I would recommend to hold with a stop of 500 because the stock has already declined from the highs of around 1000 to 500. So no point of selling at the current levels, but we can continue to hold and keep a stop of near to 500 because the stock can, if momentum comes through into these names, the stock has the potential to move higher near to 700.
That's the view with regards to where Piccadilly Agro stands. And it's interesting because since the launch of Indri, this particular company has seen a significant amount of growth in their revenue in terms of the way volumes are being sold for that specific brand. All right, the next question is from Satish, who's writing in from Bengaluru. He's purchased 300 odd shares. Okay, he's not given us a stock name. So till he gives us his stock name, we have Rinesh from Chennai.
Because there are several stocks that are trading at 1300. I told him that.
Yeah.
Unfortunately, we don't have the name of the stock yet.
So then we'll take Rinesh's query. He's writing in from Chennai. He wants a long-term view on Quality Power. He's bought 26 odd shares at 425 a piece. Asa, not sure if you have a view on this particular counter. If yes, what's the view like? Quality Power.
So it was a recent listing as far as I remember. The IPO came in December, I suppose, regarding this company. No, not December. It was in February month. I'm sorry. Apologies for that. So in February, the IPO came and it came at around 425 at the higher end of the price band. So it was 401 to 425. And now, it has now started trading above those levels. So we are positive on that company in the IPO times also. But at that time, due to the poor market conditions, we all know that in the January, February month, markets were not in the good shape. So we were not able to see good listing. But I think in the longer term, it has a potential to move upwards from here. So remain invested in this counter is what we believe. Now it has started trading above its IPO price. So idea here is to stay invested in this counter with the price target which we would like to give to this counter is 408.
The mystery stock that Satish did not tell us about. And guys, if you're writing on WhatsApp, then you have to tell us the name of the stock, the price that you bought it, if you bought it, and also how long you'd intend to hold it. The mystery stock that was bought at a price of 1,150 with a short-term outlook and a long-term outlook, both, is Reliance Industries, none other than. Okay, so Vikas, on the charts, it's under a little bit of pressure. Oh, it's actually recovered very sharply. There you go. Wow. What an interesting intraday chart. What do you make of that, Vikas? And would you hold on?
I would recommend to hold because if you look at the structure remains positive. No doubt the stock massively underperformed in the month of March and April, but since the middle of April, the stock has witnessed strong amount of rebound from the lows of 1265, 1270 levels. Now it is sustaining above the bonus price. When it came out, we gave a 1:1 bonus issue. So that amount of sell-off has also been absorbed. And now the stock could head further higher near to 1545, 1570 levels. So it can continue to remain positive.
Okay. Okay, so that's the view with regards to where Reliance stands and with respect to where technicals are concerned. Our next caller, Mansing, is calling in from Andhra Pradesh. Mansing, a very good morning to you. How can we help you?
Very good morning, madam. I'm holding Garden Dish Shipbuilders, madam.
Okay.
66 average price 460.
Okay.
Should I book or should I wait? I want to make it free of cost and I want to invest in power sector. So please recommend me any power. In my view, I want to know about one company, madam. That is, I want to book profit here and I want to invest in GIPSL, Gujarat Industry Power Corporation Limited. Is it a right approach or any other? Please suggest me.
Okay. So if I understand your question, Mansing, what you're trying to do is you're going to recover your initial cost of capital when you invested in Garden Reach, and you want to deploy that in some other stock. Can you repeat the name of the stock that you have identified?
GIPSL, Gujarat Industry Power Corporation Limited.
Okay. I will try and get you a view. I'm not sure if Asta has coverage. Asta, it's a pretty tried and tested strategy to take the cost from an old acquisition of a stock and deploy it elsewhere. What would you say about that strategy, one? And do you have coverage on the stock that he's identified in the power space?
See, first of all, Garden Reach is looking very, very strong to us on the back of the strong earnings which this company has posted. So this counter is looking good to us. And going ahead also, the kind of order inflow these companies are witnessing, they are kind of one of the exceptional order books they are having. So I think long-term view is also very, very strong on this counter. So idea here is to not book full profits, book partial profit, because if anyone really want to book some sort of profit, then partially exiting is recommended from our side, because this counter seems to be very strong to us. Now talking about GIPCL, I have not seen the results of this counter because this company has announced its results few days back. So in the power space also, we are liking 2-3 counters a lot, in which power grid is our top pick. So one can look after those counters as well.
That's the view with regards to where Garden Jeet stands, and of course GIPCL. And it's interesting, Alex, because I was looking at the financials. 3-year CAGR growth in terms of revenue has hardly been 3%. In terms of profit also, it's been 7%. The company, in fact, in 2025, FY 2025, has seen a degrowth in terms of its sales. So I think you should keep all of these things in mind, man, before investing in a stock like GIPCL. All right, the next counter that we're talking about is Bandhan Bank. Guru from Mysore is writing in. He's holding 1100 odd shares. He invested before a year ago, and he wants to know whether he can hold or sell at the current levels. Vikas, I'll come to you on this one. What are the charts indicating for Bandhan Bank?
The chart remains sideways. The stock has been a massive underperformer for the last many years and trading at multi-year lows. So would recommend to switch to some other bank, maybe RBL Bank or IDFC First Bank, where we could witness some amount of positive momentum. So it's better to exit and invest into some other mid-cap private sector bank like RBL or IDFC First.
Okay, so you've gotten alternatives as well. Navendu is calling us from Patna. Very good morning, Navendu. How can we help you today?
Good morning.
Please go ahead.
I have 1,500 shares of Aster DM Healthcare.
Okay.
Which I bought at around 375 rupees. The stock has gone up.
Yes.
My view is generally long term, and I've been trying to hold this share for 2 to 3 years. Is that advisable, or should I book some profits at this point of time?
Yeah, so and you bought it quite a while back. Seemingly you're making a decent profit. Should you take money off the table? And would you also want to know where to deploy it if the advice is to book some profits?
Not now.
You can take the cash. Is that what you're looking at?
Yeah.
Okay.
Yeah,
okay.
I will.
I got it. Asta, on the fundamentals, it's a pretty steady performer. Operationally, not too bad. In the way of its PAT growth, I think it's actually a considerable outperform on a year-on-year basis. I was looking at the Q4 numbers, 86 crore PAT, and it's an improvement in performance sequentially as well on the PAT, on the bottom line basis. What do you make of the numbers? Would you hold on, or would you book some profits at this point?
So, I mean, this hospital, they have main concentration in the Kerala and I suppose Andhra Pradesh for that matter. So, what we have seen, first of all, in the hospital space, average length of stay is the key parameter, key ratio, and they have shown a good improvement. It is 3.1 days. That is the average length of stay. The lower it is good for a hospital. So average length of stay is 3.1 days, and it has reduced from 3.3 days. Again, average revenue per occupied bed has seen a significant increase of more than 10% of around rupees 47,800 average revenue per occupied bed. So this is also very good. And another thing, that oncology is such a stream, which is always a high margin driven, because they're the patients stay for a longer term also, and in fact it always yield good margins to the hospital. This is only for hospital, I'm saying. So in the oncology, their oncology segment has also shown a good improvement, and now their revenue contribution has started increasing. So if I look after all these parameters, I believe that this hospital is well placed at the present moment of a time, and a strong operational performance, as you have also rightly pointed out. I think this is a counter which one should remain invested in for some more time. So idea here is to not book profits at the present moment of a time if one is comfortable to remain invested in, because we believe there is more upside for this counter. 600 is the price target, and above those levels can also be seen. So right now we are attributing a price target of around 610 to 620 to this counter.
Okay, so that's the view with regards to where Aster DM stands. Our next question is from Surendra, who's writing in from Chennai. He wants to know the entry price for data patterns. Vikas, I'll come to you on this one. Is this the right time to enter data patterns, or should he wait for some downside? And what are the kind of resistance and support levels that you're observing on the charts?
In terms of data patterns, no doubt the stock has witnessed strong amount of move along with the whole defense space what we have been witnessed for the last fortnight. The stock has made some amount of problem with formation near to 3200 levels, but it has good support near to 2550, 2600 band, which is a formation of the long-term averages. So 2550 to 2600 levels should be a good entry point to enter to the name. We believe some amount of retracement could be expected after a strong move from 1500 to 3200. So which gives a retracement near to 2550, 26. So that should be an ideal point to enter.
Next caller, Mr. Reddy is calling in from Hyderabad. A very good morning to you, Mr. Reddy. How can we help you?
Madam, I have purchased Kalamandir, ACC.
Okay.
ACC 200 quantity.
Okay.
Can you tell me can I hold it or sell?
Okay, and this is from a longer term perspective, or did you see the charts while buying this?
Shortfall only.
Sorry?
Shortfall only.
Charts only. All right. Vikas, I'll come to you quickly on this one. What are the charts indicating for ACC?
So on cement space, ACC continues to remain a pretty laggard. It has not underperformed. But some formation has been taking place, which gives a formation that the stock will see some amount of outperformance. So you can continue to remain invested. Maybe on a shorter term time frame, 2020, 2030 could be expected on an immediate basis over the next 2-3 weeks. So we can continue to remain invested.
Continue to remain invested. By the way, standard disclaimer, ACC is part of the Adani Group, and so is NDTV, of which NDTV Profit is a part. We've got the next question from Amit, who's asking about Tata Motors, which he's purchased at 721 rupees. He's got 10,000 units. And he's in the green. Not a lot of people can say that, and he's wondering what is the ideal price to exit from a short-term perspective. Coming back to you then, Vikas, on the charts, a lot of people lost money in Tata Motors, particularly those that have been holding since the 1,000 levels. What would you advise on the shorter time frame?
So if you look at the structure, the stock has witnessed good amount of corrective action since the demerger was been announced. And from the highs of 1100, it made some amount of bottom-up formation. But it has been witnessing good amount of recovery from those 560, 570 area. It has been trending in a particular range of around some formation has been expected. So we believe the stock could retest the 200-day average near to 780, 85 over the next few weeks. So continue to remain invested. And if it draws down a longer-term process, maybe 6 months down the line, the October demerger date is expected. So that post the demerger, the stock will witness strong amount of returns. So if he remains invested for the next 6 months, good amount of returns should be expected.
All right, so that's a view on Tata Motors. Shailendra is calling us from Odisha. Shailendra, very good morning to you. How can we help you today?
Good morning, sir. Sir, I'm having Vadiland Industries 460 shares.
Yes.
At the rate of 3870.
Right.
And I want to hold it for long term.
Okay.
So please suggest me. Can I hold for long term? Long term means more than 1 year.
More than 1 year. And you're asking based on the fundamentals, right?
Yes, exactly, sir.
Okay. You've seen the earnings?
No, not this quarter earning is of course revenue has risen by 25-30%.
Yeah.
Profit is a bit down.
Yes. Margins have contracted. You're right. And which is why the stock was a little bit under pressure. It has recovered from the low point of the day, though. I get your question. Let me ask Astha. Astha, it's a result that was not necessarily the best. Particularly if you're looking at, and of course this is a seasonal business, and the first quarter of the year is generally seen to be positive, but since we've got an early onset of the monsoon, do you think that's going to hurt the company? 1, 2, would you hold for the long term, or would you book at this point?
So first of all, guest results were not on the expected line. In fact, if I take out their other income extraordinary items, so it was a degrowth in the bottom line by 25%. This is, I'm talking about Q4 numbers. Now, in fact, if I look after the full FY25 figures also, the bottom line was quite flat of around 133 crore, I believe. So there was no growth in the full year financial 25 also. Now, talking about third part, the valuation, on the valuation parameter also, it seems to be fairly priced. So I mean, if I look after all these parameters together, then it is signaling that they can be some more downside in the stock, and stock will not be able to perform at least coming 2 months due to the bad or not so good results. So idea here is to book partial, profit and remain invested in partially. Yes, you are absolutely right. Maybe the company can see some sort of a moderation in the demand due to the earlier, onset of the monsoon. But whatever is there, we will see it in their Q1 numbers. Right now, exit partially, but don't exit fully from this company.
Exit partially is the view coming in on Vadilal. In fact, it's very interesting to keep a track of these ice cream companies, because Vadilal has focus in west and north region more. There's Hatson Agro, which completely takes over the southern markets. But we've also seen that in the quick commerce space, there are a lot of new startups that have come in. There's Go Zero, there's NIC, which are taking up a lot of market share from these companies. So that is also one of the reasons that is impacting earnings for all of these companies.
No doubt, and even in of course, it's a completely different space where you're talking about the food space and the quick delivery space.
Correct.
A lot of the listed entities are facing problems from the unlisted space, which is similar in this case as well, right?
Absolutely. So I think that is also one of the factors to watch out for when you track these ice cream companies. All right, the next question is from Lalita, who's writing in from Chennai. She's holding 100 odd shares of Sirma SGS, bought at 478 a piece, and wants to know if this is good to hold or switch to another stock. I believe it's from the EMS space only that she's asking about. Asta, I'll come to you on this one. What's the view like for Sirma SGS, and would you prefer any other EMS stock over Sirma SGS or continue to hold?
I think the guidance was very, very strong. So, I mean, in fact, the margin was there, the guidance was strong. So there is no need to, switch to any other counter. This counter seems to be perfectly fine at the present moment of time, at least for the upside potential of around 600 to 610 odd levels. Remain invested in this counter.
Okay, all right. Mubarak has got the next question and asking about Canara Bank. Bought as many as 20,000 shares purely from a dividend point of view. Okay, so it's actually a combination view. Let me do this. It's actually a combination view. So let me add what he's also asking. Mubarak is asking about NMDC 60,000 shares and Canara Bank 20,000 shares. Plan is to have a combination of 1 lakh shares of both, purely from the perspective of dividend payout. Is this the right approach to have? Asa, what is your opinion?
Yes, one can have, this type of combination with the dividend approach, but I still believe that the more capital appreciation lies in the stock price momentum, dividend approach is, somewhat a safety net as well as, a fixed income sort of thing. So for Canara Bank, in fact, even I believe that there is a more scope for the capital appreciation, because we believe that the kind of credit growth this bank has posted, it has, outpaced the expectation. So we believe that this counter is having a potential to move more upside from here till the level of 120. So Canara Bank, with the capital appreciation as well as dividend thing, I think it is a good bet to remain invested in. For another counter, which is NMDC also, I believe that is also a strong counter to remain invested in. So both these counters are looking good to me, both from the perspective of dividend as well as capital appreciation.
Okay, so that's with regards to where both these stocks are concerned. Our next caller, Harish, is calling in from Visakhapatnam. Harish, a very good morning to you. I believe you have a query on Tanla.
Yeah.
Go ahead with your query,
morning,
Harish.
madam.
Good morning.
I am having 100 shares of Tanla platform
Okay.
at the rate of 739.
Okay.
Can I hold it or sell it?
Okay, got your point, Harish. I'll take this up with Vikas. Vikas, I'll come to you on this one. Recently, promoter bought in almost 1.4% of the equity around 13th May, and we saw a significant spike in the counter at that point of time. What's the view like with respect to where charts are concerned for Tanla platforms?
The chart looks promising because the stock has witnessed a double bottom structure near to 440, 400 odd levels. Huge amount of volume expansion has taken place in the 460, 480 when the promoter would have bought from the bond market with more than 20 shares trading. So the stock has the potential to touch the 200-day average near to 685, 700. So continue to remain positive on the name.
All right. Let's take the next question. TD Power Systems for a long-term investment. Raza wants to know about this. Is it a good counter to invest in? Quick view, Asta?
Yes. We have in fact given a buy rating to this counter a few days back also. So a good stock to remain invested in with the kind of the results they have posted exceptionally well. Our price target for this counter is more than 500, which is at around 545 at the initial levels.
We've got Sikan calling us from Odisha, asking about BEL, I understand. Sikan, is that right?
No, I am asking about BEL, Bharat Electronics.
Same. Okay, go ahead. What is the question?
I am holding 100 shares at 278. So should I book my profit or sell it?
Got your question. All right. Let me take this across to Vikas. Vikas, Bharat Electronics, would you sell at this point if you bought at levels of 278?
I would recommend to book profits because if you look at the defense story has been played out, the stock has been just trending in this particular range. So partial profits can be booked out, maybe not fully, and wait for some amount of decline or retracement near to 345, 350 or levels.
Right. It is time now, Vikas as well as Asta, to hit the rapid fire round. And this is where we ask you as many questions as we can over the span of 2 minutes. The first one is on Olectra Green Tech. Under a little bit of pressure today, would you buy for the short term? Shiva wants to know. Vikas, what's the view?
Would recommend an hold.
Okay, Balaji from Bengaluru wants to know whether he should sell or add more of Samvardhana Motherson. He's bought 100 shares at 133 a piece. Asta, your view?
So I think he can add more at the lower level of around 140 to 135 zone.
Okay, BHEL, hold or sell is a question. Bought at levels of 325. Nikhat wants to know, would you do either? What's the view, Vikas?
They surely should buy for a target of 280, 85.
Okay, Nalco is the next counter. Ranjana from Bengaluru has bought 500 shares at 185 a piece. What's the short-term outlook? Vikas, your view?
The stock has some resistance near to 188, 89, so avoid.
Ramya wants to know about Bata shares. Is it safe to just hold without accumulating? I do not know the buy price. Asa, what's the view?
Yes, one can hold this counter at least for coming 3-4 months.
At what levels can I enter HAL? Narayanan from Chennai wants to know. Vikas, what's your view?
Wait for some 5 to 7% decline.
Niva Bupa is the name of the counter. Bought at levels of 80. Akash wants to know 4,000 quantity. Should he book or wait for further upside? Vikas?
Recommend to book profits.
Okay, HBL Engineering is the next counter. Harshit wants a long-term view on this one. Asta, your view?
So long-term view is positive, but in the near term, we can see some sort of a pressure. But long-term view is really positive with a price target of 610 between.
Okay, NRB Bearings, if you've got a view. Asta, Shiju wants to know, bought 1,800 shares at 330. Would you hold?
Yes, definitely. The results were exceptionally well in the quarterly numbers. One can remain invested in this counter. Price target can be set at around 285 to 290 odd levels.
Okay, Kotak Mahindra Bank. Should the person continue to hold or sell? He's holding 100 odd shares. Vikas, your view on the charts?
You can continue to hold.
All right, that brings us to the end of the rapid fire round and to the show as well. Vikas as well as Asta, always a pleasure having you on the program. Thanks so much as always for taking the time. Right, that brings us to the end of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. As I said, at 11 o'clock, up next is Know Your Company. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture? Hello and welcome. You're watching KYC, which is Know Your Company. Today we're going to focus in on Jyoti CNC. It's a niche business again, and that's why it's very interesting. Took me some time to understand the business itself, but let's quickly dive down on what I want to know about this business more than anything else. It currently trades at 90 times price to earnings. Certainly not cheap by any standards. Question is, are valuations justified just given the growth potential? So that's something we'll try to answer, and of course we'll get insights from the management as well as to what they believe the growth trajectory is going to look like, and therefore what the potential is, and therefore whether valuations actually justify that kind of potential, because we are looking way out in terms of valuations or earnings multiples starting to normalize. So that's the one big piece that I want to understand. Second one, it's a specialized business. So what opportunities will it capture? Because as of today, it is the only component manufacturer selling to EMS companies, which is electronic manufacturing companies. Now, when you're looking at an opportunity which is that large and you are the only player, of course, you are virtually like a monopoly. But what happens when other players start to eat your market share, at least the domestic market share, for among the EMS business? And therefore, that's something I want to really understand. What opportunities will it capture going forward, and what happens to the opportunities it's already captured? So something I'd want to understand. The third piece is with regard to Hurun, its manufacturing facility in France. Again, there's a big turnaround in Europe, which is already at play. I want to understand whether that opportunity is getting adequately captured already with what the markets are anticipating, or is there a larger opportunity over the next couple of years? Because that opportunity we're not fully clear with regard to how large it is and how Jyoti will capture it. And therefore, that's the other thing I'd want to understand. Working capital, there is some pressure with regard to working capital. Clearly, your working capital days are way too high. You want that to come down. They've guided for it to come down in FY26. What gives them that comfort, and how much can they bring it down by? Because that is eating into cash flow from operations. We'll see it in the metrics. And that's the other thing I want to understand. The last piece is with regard to capex plans and funding. You have obviously this extremely large opportunity, But CapEx, just to put it into perspective, they're going to take 6,000 machines, which they currently have a capacity for, and increase that to 16,000 in the next 12 to 15 months. That's a very, very large increase in terms of capacity itself. And therefore, what is the funding, sustainability of return ratios as they ramp up is really the question I will be asking. So large capex plans, how do you fund it, and what's thereafter, what lies is what I want to understand. So that's how it all stacks up with regard to what I want to understand. But let's quickly zoom into what the company does, and this is where it starts to get very interesting, and I'm going to try to break it down. Let's look at what it does. It is the leading manufacturer in India of 5-axis CNC machines. I'm going to try and break down what a CNC machine is. A CNC machine is a computer numerical control machine. Typically, when you want to make a niche component or part, think of it as an auto component, a nut, a bolt. You typically will need a 3-axis machine, which goes on the side and down. A 5-axis allows for a rotation and a more nuanced component to get made. So that's a 5-axis machine. Jyoti is one of the players which manufactures this 5-axis machine, which allows the manufacturing of a component by the machine moving in all directions. There are of course 6 and 7-axis machines as well, which are far more or higher in terms of their niche, but the 5-axis itself is a very, very high niche product. In India, you have around 10 to 12% market share that Jyoti caters to, and 50% plus is catered through import. So the import substitution potential for this machine is extremely high. This is where it stands out versus some of the other players. It allows, these are broadly the type of products it manufactures. Okay, I won't get into the nuances of the products itself, but it's a niche component manufacturing capex machine, which allows you to manufacture niche components within the aerospace, auto, transport segments, right? Instead of the 3-axis, it uses the 5-axis. That should kind of cap it off. What does it enable? It enables complex design of machine parts. It enables high accuracy, reduced time, and it also enables lack of manual intervention. A lot of this is done completely automated, which is the big positive. Now let's talk about what it caters to and what industries it caters to. The new products that it caters to is medical devices, toys and drones, which is on your screen, but it's largely utilized in electronics, telecom, auto, aerospace, medical, transport. This broad breakup of where all it is utilized. Now I want to also talk a little bit about some of their clientele, because that gives us deep insights into what is the kind of niche product that it does. Its clientele includes HAL, which is HAL, Tata Advanced Systems, Airbus, you have a GE, a Rolls-Royce, a Safran, Boeing, again the defense manufacturing of Bharat Forge. You have a Tata Motors, a Mahindra within the auto space, a Volvo, a BMW, a Mercedes, an Audi, a Volkswagen, an Ashok Leyland, a Fiat, and then within even the others basket, you have something like a Harsha Engineers, you have a Titan, a Bosch, a Havells. So you get the kind of diversity in terms of clientele that Jyoti deals with, and broadly the components and parts used in some of these industries are what Jyoti helps. So it's a pure B2B, helps other businesses with. That's how it stacks up in terms of clientele as well. Now let me quickly also take you through its presence and its manufacturing. It has 2 facilities, one in Rajkot, where they have more land as well to allow them to grow, and the other one is in France. And this is their Huron facility in Strasbourg in France. They had bought this in 2007. Important to understand some dynamic around this. But Okay, so let's first talk about the India capacity. They've grown the India capacity from 4,400 machines per annum to 6,000 machines per annum. Their current capacity utilization is around 85%, so it's nearly at full capacity utilization. There is an expansion plan in India to expand the current facility to enable manufacture of 10,000 more machines, so taking the total to 16,000. Okay, by end of this financial year, capex of 400 to 450 odd crore will be undertaken for this, and this capacity will come on stream as early as June 2026. So in the next 12 to 15 months, you'll likely see this capacity come on stream. Let's talk about Europe also a little bit. There's been some bottlenecking which has happened there. So the top line of around 400 to 450 crore coming from Huron will now go to 800 crore as a result of this debottlenecking. Again, this will happen maybe in the next 2 to 3 months. So we'll try to understand how these timelines will work and how demand is shaping up in both of these markets. But let's talk a little bit more about Huron. It was acquired in 2007 for 16 million euros. At that point, the top line was around 33 million euros. Currently, and that top line was largely flat till 2019, so no change. But what they did was they utilized some of the R&D sitting in Huron in India to try and do product innovation, and that's exactly what's helped the numbers. So by 2023-24, Europe had also picked up. The order pipeline from 2023 to 2024 sitting currently is around 2,000 crore. So there's a large execution which is waiting to happen over there. And that's why that 800 crore push to potential top line looks likely, because you have a very large order backlog which is